From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Tuesday. I'm Juliette Sarley alongside Sue Lennon. Good to see you, Sue. A bit of an interesting session. When we came in, we were listening and watching to the reaction about Justin Trudeau resigning. But the market, I guess, again, it was a story of the tech and the mining players sort of at that battle today.
Yeah, very much. It was really more of a local story, aside from the boost we saw on Wall Street. I think we saw Nvidia hit a record high during its session, so that helped the local IT sector here. So in the end, the CBO 200 up 0.4% and the ASX 200 put on 1/3%, with IT stocks doing the best on the market.
Yeah, just getting to some of the themes as well. I mean, a new year and sort of new confidence as well. I know you had a really interesting chat with Mibui earlier. That ANZ survey, of course, Mibui is from AMP, but we are seeing an uptick in confident consumers, and so many reasons. We're expecting more tax cuts this year. We are expecting at some point the RBA to cut. Hopefully there is going to be a little bit more of a boost to disposable income.
Yeah, well, certainly optimistic, even though there's a lot of uncertainty ahead. We certainly saw big sales for the Boxing Day sales, so we've got the retail sales figures coming up this week. So let's see if that confidence continues.
Indeed. Now, barely a ripple when it comes to the reaction from the resignation of Justin Trudeau. Really interesting conversations. I spoke to Robert Both from TD Securities in Toronto. This was, of course, widely factored, but the outcome now is what happens next. And of course, just this ongoing momentum in terms of incumbents finding it hard to contain or retain power, I guess, similar to what we've seen in so many economies, including in the US and the UK. And then tomorrow, of course, Sue, a big one. We've got CPI data. I know you spoke to Paul Bloxham from HSBC earlier. Yeah,
he's expecting a print of around 2.1%. Now, noting that this isn't the full basket of goods, it's the November monthly figures. We'll get the imprint for December, the December quarter at the end of the month, and that's the figure that the Reserve Bank will be watching closely.
Absolutely, we are waiting for that quarterly print. All right, quick look at the sectors. You mentioned Nvidia. We heard from Jensen Huang at CES, and of course, actually, I wanted to start with the consumer stocks. Excuse me. That was on the back of course, that pickup in consumer confidence. Wesfarmers, look, it's ending the session down by around 0.2%. JB Hi-Fi, though, higher. And it was interesting across some of the other sort of discretionary stocks. Aristocrat Leisure, I think at one point was up by something like 3% today.
And let's have a look at some of the tech stocks today. WiseTech Global put on 0.6%. We saw Xero, the software firm, up 1.7%. Data centres operated Next DC up 3.1%, Technology One up about 0.2%, and Zip, buy now pay later firm, put on 3.5%.
And as you say, really just rallying in response to the Nasdaq and what we saw with Nvidia. Okay, quick look at the miners. That's where we saw some weakness once again, dragging us down or hindering some bigger gains. Fortescue getting hit hard as we continue to watch what's happening with iron ore, down 4.2%, falling below $18 a share. BHP and Rio both off by around 0.8%. Getting into the corporate stories, this was our stock of the day, IDP Education, one of the best performers, up by almost 5% on the close. Now, Macquarie upgrading the stock to outperform, pointing to near-term consensus downgrades and the company's first half results as a potential buying opportunity. And don't want to give it away, Sue, but there was some pretty good momentum on that from our guests on the call today.
Yes, absolutely. Now, Nine Entertainment, publisher of the Australian Financial Review, jumped. So they expect to appoint former Foxtel executive Amanda Laing in a new role with responsibility for broadcast operations. That's under a wider proposal to overhaul management. So we saw Nine rise nearly 6% today.
Yeah, Ramsay Health was another one. I mean, it's so quiet at the moment, isn't it? So any sort of broker move that is a big one really seems to be a theme. Morningstar saying the market is undervaluing the hospital network, so traders flocking really to some of these defensive sectors.
Now, Citi upgraded Amcor to buy after a December sell-off, so that boosted that stock today. It rose 2.1%.
And Capricorn Metals also moving higher, posting its highest quarterly gold production result for 2024 in the December quarter, bringing us nicely to our guest, who's a bit of a gold bug, Sue.
Yes, and to wrap up tonight, the overnight moves, which we of course saw the resignation of the Canadian Prime Minister Justin Trudeau. So Jonathan Takadina, welcome from MPC Markets. So what was the reaction to that announcement?
So the main thing that I take away from Trudeau is why he actually got kicked out is that, just like in the West, it's immigration and inflation. So if you don't have those two in control, basically, as you said, the incumbent just can't keep power. So obviously that's a warning sign for here in Australia. So if you don't have a good, strong immigration policy on immigration, or if these inflation numbers keep ticking higher, chances are you're going to lose your power. So that's the warning for politicians here in Australia.
Yeah, it's such an interesting scenario, really, isn't it? Because it's sort of the opposite as to how Donald Trump, or the reason, I guess, why Donald Trump did get in. But we've seen Rishi Sunak, we've seen, of course, what's happened in the US with Joe Biden, and of course now Trudeau as well. The main momentum, though, a lot in the currencies, and we often talk about how the Canadian economy is quite similar to ours.
Oh, absolutely, yeah.
Why should we be looking so closely at the Aussie loonie?
Okay, so what you want to look at is, so Aussie and Canada, but pretty much sister economies. So we're both Western, both Commonwealth, resource rich, and we have massive property booms in the last few years, and obviously high immigration as well. So what I tend to do is look at the Aussie CAD as a sort of like a cross currency, and what you've seen is that even though Canadian's been quite weak against all of them, it's actually been stronger against the Australian dollar. So now that's at the bottom end of the range, and that could actually trigger what I think is maybe a low in the Aussie dollar against the US as well. So we've seen the CAD jump against the US dollar. Aussie has jumped as well, but I think that could be a turning point here. And I think the dollar index is kind of an important chart to keep an eye on. As that keeps ticking high, it just makes it harder for equities to rally here. So I think if that takes a breather, then we could see a bit of a stronger start to the year for equities here.
Now, as you mentioned, so the dollar index rejecting the 109 level. So could that be the top? And is that the low for the Australian dollar at 62?
So I'm going to go out on a limb and say, yeah, I think that's the top here, because there's a lot of things that Trump wants to do, and a lot of it's based on a weaker US dollar. So I don't think that they're going to intervene in that, but I think they will come out with policies, and a stronger US dollar. If he wants to bring back all that manufacturing to the US, he needs a weaker US dollar.
Jonathan, I want to ask you about gold, because we talk about it a lot, but I just did a sort of deep dive into the massive moves you saw in 2024, something like 27%, the actual physical commodity, outperforming all other commodities, one of the best performing asset classes. Does that continue this year?
So the main reason that it rallied so much and it's actually outperformed the S&P is that central banks were buying. And I think with Trump coming in and still a lot of geopolitical tensions, I still think it's one of the easier trades for the year.
Yeah.
So I think any dips you just have to buy gold. And we've seen it in Bitcoin. So Bitcoin's retaken 100,000. So people are just looking for places to park their value, and so gold is going to be one of the beneficiaries, and obviously Bitcoin's another one. So I still think that's where you want to park your money for 2025.
Yeah, interesting.
Yeah, so as you said, we see Bitcoin staying above 100,000. Is that going to be fueled by possible deregulation from
absolutely.
Donald
So
Trump?
I think it's running on the back of Trump's coming in a week and a half's time. So I think it's next Friday he gets inaugurated, and I think we're seeing a push into that. So I remember earlier before Trump got elected, I think it goes back to 100, and I think it goes on to 120. And I think we're in place for that. So I think the crypto guys are going to enjoy Trump coming into power here.
But are you worried about a crash?
So I've been in Bitcoin for a while. I got in from 18, so an 80% crash is actually quite normal. So
you got in at 18,000.
No. So I'm just saying an 80% pullback.
80%
An 80% pullback is actually quite normal in Bitcoin.
Yeah.
So I'm not saying that can happen again, but if it does do it again, it's sort of a precedent here. I think we are in different times now, because obviously Michael Saylor's coming in. He's coming in selling con notes on MicroStrategy. So there's just a lot more institutional players in the space now. So I don't think it can pull back as far because I think the institutional buyers will come in and support it, but it will still remain volatile. But I do think the longer term, store of value, as with gold, I think it goes higher.
Now, you and Mark have been helping us out a lot. So all systems go at MPC markets, even though the city feels pretty quiet. What are you seeing in terms of trading volumes?
Trading volume's quite light at this stage, and like what you're seeing, and when you look at the futures side, you're just seeing moves out of nowhere. I remember, last week we saw a 60-point move out of nowhere, and I saw the volumes that were quite low as well. So I think we're starting to see. I crossed the bridge, so there was a bit of traffic yesterday. So I do think people are starting to get back to work, but I think the volumes will remain light for the rest of the week, and then we'll start to see more into next week.
All right, Jonathan, always a pleasure. Thank you so much.
Thank you.
Jonathan Takadina from MPC Markets. Now, I was on the call today and the stock of the day was IDP Education. We had, of course, Jonathan's colleague Mark Gardner from MPC Markets and also Michael Wayne from Medallion Financial.
They don't have a lot of control over their customer flow and regulatory changes, but can really affect them. But I think down here is pretty opportunistic, particularly, Macquarie upgrading them from here was, I think getting back to $16 is, that's a nice little, it'd be a nice tidy little profit. But I mean, if you look at that chart, it's from a risk reward standpoint, this company does make money. The worst is probably absolutely priced in, and I think it's not a bad risk reward standpoint. For a company that's got a fairly stable and has had a lot of headwinds over the course of the last 2 years.
But we just feel as though the negativity and the extent of those changes in policies are probably behind us. There's a bit more clarity on the outlook now, and even despite or all through this period, they've actually been winning more and more market share. So this is a company that has fallen a lot in share price, but its earnings haven't really moved that much at all. In fact, they've continued to grow in recent years. Last year was more of a consolidation year. So the valuations come down significantly, and we quite like it.
So that was a double buy on IDP, but it was the only double buy of the show, unfortunately, Sue. But of course, you can catch up on that either on podcast form or you can stream at ausbiz.com.au.
Let's have a look then at the market leaders today. Nine Entertainment put on 5.6%, IDP Education down up 4.6%, Clarity Pharmaceuticals up 4.6%, Audinate rose 4.3%, and Hub24 rose 4.3%.
Yeah, and Nine really moving, of course, on that news about Amanda Laing. To the downside, we did see quite a bit of weakness in these iron ore players. Fortescue down 4.2%. A little bit of a pullback from some of the gold and also other resource stocks that have been ratcheting higher, but Yancoal down by 2.9% on the close.
Let's have a look at the small caps. Dimerex rose 37%. Now 4G Medical also surged 18%. Now that's thanks to some US drug approvals, which helped its share price. Playside Studios rose 13%, and Paradigm Bio put on more than 10%.
And some of the laggards in the small end of town today. Ariadne down almost 10%. You can see Spirit Technology, Aspire Mining, Orthocell and Bisalloy Steel also among the laggards.
So let's have a look at what's happening overnight. The US JOLTS, the job openings for November will be out, and the US ISM Services Index for December will be out as well. So will give us a bit of another read on how the US economy is tracking.
Absolutely, all ahead of that key non-farm payrolls on Friday. Locally tomorrow, we get the monthly CPI. We discussed that, of course, not as important as the quarterly one we'll get at the end of the month, but also some data. I don't think that's the real jobs numbers. They're always on a Thursday, aren't they? But maybe a little bit of a read in terms of some of the other moves that we are seeing in the overall economy. But our first investor event of 2025 happening this month, January 30th, time to get it in your diary.
High Conviction is a selection of the best ideas for this year across public and private markets. We'll have some of the country's top investors with their high conviction concepts, whether they be themes, strategies or individual stocks. Registration is free and you can get all the details at ausbiz.co/conviction.
All right, quick look at where the market is ending the day's trade on what has been a really interesting session. We mentioned, of course, the lead in terms of those tech players really lifting tech players as well. Nine and IDP a front runner. Pretty much every sector except utilities and miners coming under pressure today, but certainly IT pushing us ahead. So a gain of around 0.4% there on the CBO 200. And Sue, I think a similar gain on the ASX 200.
Yeah, that's right, up 0.3%. The S&P ASX 200 closing up 27 points to 8,285. And as you mentioned, IT stocks doing the worst. The miners were the laggards on the market today.
All right, well, that does it for this Tuesday. We have, of course, had a very eventful day. Lots of conversations you can catch up with on ausbiz.com.au, and we'll be live again from 9:45 a.m. Eastern. See you then.